Over the weekend, China's foreign ministry saying that, quote, the market has spoken when it comes to President Trump's tariffs. And for more now on how China is responding, I want to bring in Mary Lovely, a senior fellow at the Peterson Institute for International Economics. Good morning to you. We're all trying to make sense of what may or may not happen here as these negotiations, if that's what they even are, play out. To the extent that you think that the Trump administration or the Chinese government has the better hand in terms of what happens next, and if there's an off-ramp, what do you think happens?
Well, we know that the first thing that happened was that the Chinese government decided to levy its own 34% tariffs on U.S. exports. So if there is going to be a negotiation, and the Chinese still hope there will be a negotiation, the president of China, Xi Jinping, wants to go to those negotiations with some ammo in hand. There has to be something to bargain with if there's going to be bargaining. So we're hoping that there's a deal somewhere here if you're concerned about what these mean for U.S. consumers and U.S. businesses. But it's not really clear. As far as we can tell, the Chinese have no understanding of what the Trump administration would accept in a deal. The Chinese are not sure what they'd be willing to give. So we're still very, very far away from a deal.
Mary, the thing that I can't understand is who has more leverage in all of this? Because as the markets here in the United States continue to drop, and that's not to say that they're not dropping, obviously, in Asia and around the world as well, but you have to imagine that there will be a tipping point where constituents of this administration and members of Congress and the House and the Senate start to say, no mas, we're not doing this. And so there is going to be a double pressure, I would imagine, on this administration to make a deal. The question is that double pressure, if you will, exist in China, or do they have more patience than we do?
Well, the Chinese, as we know, have been trying to revive their economy. They've had very weak domestic demand. They've been using both monetary stimulus and fiscal stimulus. They have more to give on the fiscal side, and they're already beginning to use it. Manufacturing is a significant share of their economy, but exports to the United States are not. It's less than 3% of GDP. That 3% does matter. There's a lot of softness, particularly in the factory sector, and that represents a lot of jobs. But China has already decided this is not where its future lies. It has been shedding jobs and so-called labor-intensive activities for years, and its plan is to continue. They want to move up the value chain, as we know, into higher tech type of manufacturing as well as services. So there are many Chinese who see this as inevitable, something they're going to do anyway. And they're right now behind their president in terms of not giving in to what they see as U.S. aggression.
In terms of an off-ramp, is there something you think that the Chinese could offer President Trump so that he could claim a quote-unquote win and that they could claim a win? What does that even look like?
Yeah, I think that what we know is they're negotiating in a very low trust environment. The Chinese did sign a deal with President Trump in his first term, the so-called Phase 1 deal. Both sides view it as not successful. So there isn't a lot of trust here. So what would a deal look like? Certainly the Chinese are ready to make bigger purchases of U.S. exports. It could be in agriculture. They certainly would like to buy more advanced equipment. So they will always say we would buy more from the U.S. if the U.S. would let us. The Chinese would like to invest in the United States and see those investments routes closed. We're certainly looking at what happens with TikTok to see if there can be any kind of mutually agreeable solution to that issue as a bellwether.
That's another 75 days.
And fentanyl.
We can talk about fentanyl, but I do want to read you right now because it just literally crossed the wires, if you will, or really crossed Truth Social. President Trump just posted this, and I'll ask you about it. Listen here, if you could. Quote, oil prices are down. Interest rates are down. The slow-moving Fed should cut rates. Food prices are down. There's no inflation, and the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abusers of them all, China, whose markets are crashing, just raised its tariffs by 34% on top of its long-term ridiculously high tariffs, plus, exclamation point, he says. not acknowledging my warning for abusing countries not to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past leaders are to blame for allowing this and so much else to happen to our country. Make America great again. I want to ask you your reaction to that, but I want to offer one piece of context, which over the weekend he was specifically asked about interest rates and gas prices and the like, and said that he was not trying to push them down, meaning that he was not happy that that was what was happening. So here he is.
That it wasn't a plan.
That wasn't a plan. So here he is now effectively suggesting it is a plan, even though over the weekend he said it was not a plan. Mary.
I mean, it's a little bit of what are you going to believe, me or your lying eyes? We know that this will be inflationary, particularly the way that the tariffs were designed. There are very high tariffs on countries that, frankly, the U.S. should and needs to be importing from, both to keep U.S. manufacturing competitive and to keep consumers enjoying a particular lifestyle. So we've seen very high tariff rates, for example, on all your garment manufacturers, even as we were trying to reduce our dependence on China. So I think the president really has mischaracterizes Chinese tariff rates. There are many complaints that we have, valid complaints against Chinese trade practices. Stated tariff rates are really not the big one. It's really hidden barriers to U.S. exports, the failure to stimulate their economy in a way that would keep them on their track to becoming a major consumer of their own goods, fear about export surges, particularly in EVs and other sectors. So this just seems to me to be backward looking. I think it's not looking at what's going to be happening over the next few months. So I expect that we'll see if not the tone, certainly at least the content of President Trump's tweets changing over the next few months.